Good evening, everyone. This is Wayne, and this is the video version of the trade report for Thursday, March 29th, 2018. Well, the markets got their act together today and made me look real good as it relates to my forecast from yesterday's trade report. Stay tuned to find out more. Greetings, ladies and gentlemen, fellow traders. Thank you very much for joining me one last time this week as we go over the events of the day in the financial markets. Well, if you recall, last evening in the trade report, I was calling for an up move in today's market, just based on my thesis, all the observations that I'd made regarding where we were at as it related to the end of the month, end of the quarter, uh, the last day of a trading week before a 3-day weekend. All of those things just seem to conspire uh, to a confluence where the probabilities of going higher were much more pronounced than going lower. Well, we did get that manifest move higher today, and it really did push pretty good to the upside. In fact, at one point during the day, the Dow was up over 450 points. Now, the Dow did close only 254 points higher. The S&P closed up just under 36 points. The NASDAQ closed up 114 points. And Amazon recovered today. And there's a little story about that, of course, kind of a dovetailing follow-up to yesterday's Trump tweet. Yes, he tweeted again today, and it did cause a little bit of a hiccup in Amazon, but Amazon caught its breath and closed in the green today. In fact, it closed up about $16 after being down about $40 to $50. So, I mean, Amazon just moves. So, at any rate, we'll look at that a little bit later. And then the Russell 2000 closed up just over 16 points. So we had green across the screen today. Um, the VIX did close lower today. It dropped about, well, let's find out exactly how much it did drop. I'm not just going to throw a number out there. I was going to say about 2.5 points, but it closed just under 3 points. It closed down to 2.90 points to actually close under 20, which 20 is kind of the line in the sand as it relates to an ultra volatile market and a and a only just volatile market. So, we're heading into a 3-day weekend. There may have been a little bit of market manipulation around volatility as well as around end of the month, as I mentioned last night, window dressing and big money managers going in and just kind of reapportioning and moving money around and like I said, we went a lot higher today, and it's kind of nice to see that the market hasn't forgotten how to go up and to do it without the crazy moves that we saw on Monday of this week, which was just kind of, with abandon. Today it was more metered. It was more methodological. There was less fear of missing out. It was more in line with what appeared to have some sort of a plan associated with it. So that was good. We really liked that. So just, really quick to go over the week. So we had Thursday's trade, which started in the pre-market. Let me get a little thicker line here, which started in the pre-market on Wednesday evening, and we just kind of plunged, continued down, looked like we might recover, and then a couple zigzags on last Friday, and then Friday we really got a gut punch, and I'll be the first to admit I thought Monday was just going to be a slam to the downside. It really did remind me of the August 24th Monday that was just an absolute free fall. But we got bought in the extended slash pre-market on Sunday night, Monday morning, and then Monday we dropped a little bit. And like I said, it looked like we were going to collapse on Monday. And that's when we really got bought. And then we continued getting bought. And then Tuesday, the bears basically came in and said, no, we're gonna you can have yesterday, we're gonna take today. And then everybody was like, what just happened? And so between Monday and Tuesday, we had jubilation, and then, to say frustration is an understatement. I mean, some fear actually came back into the market at that point, but we hung in there, basically went sideways in the overnight session on Tuesday. And yesterday, Wednesday, we just had a chop fest. It was just ugly, up and down, all around. Just, you can watch yesterday's trade report to get a sense of, what that was all about. And then the extended session, overnight session last night, was kind of all over the map also, but it started to look like it wanted to go higher. And then when the day opened, and we'll reduce this at this point, get a good sense of this. When the day opened, we got a little bit of a push up, a little bit of a push down, and then it was basically up from there with a little bit of sideways thrown in for good measure. And then at the end of the day, we got a pretty decent pullback, but that was a technical pullback because the developing point of control right here had pretty much, kind of been waving a red flag, so to speak, at price, saying, "Yo, you needed to come in and check me out. This is, you need to come back down," and it did dutifully. So at any rate, the Deepak touch, and then a little bit of a pop into the close for the day, and now the market is closed for let's see, the next 24, 48, 72 hours on a 3-day weekend. It seems like forever for when the market's going to reopen. So anyway, that was the S&P futures and a recap for the week and also the week before, where we were, where we've come from, and where we are now. So what do I think is going to happen Monday? Well, if we don't get any contrary news over the weekend, I think we continue to the upside. However, we're not just going to go to the upside because we had a good trading day today. And I do want to show you we're going to do a little chart analysis today, folks. I promised you I'd do a little bit of that, and I'm going to do that in the form of Fibonacci's. So we're going to look at a stock. It's actually an ETF called the DIA. Now, the DIA has been kind of nicknamed the Diamonds, and it's an ETF for the Dow Jones Industrials. So it basically tracks the index. And so when you buy the DIA, you're actually buying the Dow Jones Industrial Average Index. And it does have options. So whenever I make a trade, 99.9% of the time, I am buying options or selling options to build a position. So I own the DIA calls, which means I am looking for an up move out of the Dow. And the Dow gave me a very nice up move today. So that position is looking pretty good. Now, the Dow faded into the close, but the positions that I put on are called swing trades. So I'm not looking for profits in one day. I'm looking for a position that is going to, slowly build a profitable base. And then I have a thesis based on my original idea getting into the trade, and I'm constantly testing the price action on any given day while I am still in the position against my original thesis. And if it still is holding to the thesis, even if I'm not in a profitable position with the trade, I'm going to hold it because my thesis is something that is based upon probabilities, market action, and market sentiment. And so I am looking for particular action out of, in this case, the DIA that will ultimately provide me with a profitable trade. And today it was profitable, more profitable than it is now at the close because it did back off, but it's still up. So, I mean, I'm fine. Now, how do I develop a trade? This is probably a really good thing for y'all to see because I'm looking at a variety of different influences, a variety of different information, and one of those pieces of information is Fibonacci levels. My mentor, Carolyn Baroden, the Fibonacci queen, was very clear that Fibonacci levels are more than just a technical indicator. They are an energetic resource that provides input and kind of a peek behind the curtain of market energy. And I have seen this time and time again when I use Fibonacci's. And so Fibonacci's have become a staple for me as it relates to my arsenal of tools that I use in order to establish a trade thesis. So what do I do? Okay, so I'm looking at a daily chart of the DIA, and you can see obviously that it's gone up and down and all around, especially since February 6th, which was the huge pullback in the market. But what this does, as the market moves higher and lower, is it establishes what are called swing highs and swing lows. So this would be a swing. Let me get this. Hold on. This would be a swing high. This would be a swing low. Swing high, swing low. Starting to sound like a song. Swing high, swing low. So what I'm doing, and of course in between all of these major swing highs and swing lows, we have minor swing highs and swing lows, like there's a swing high and there's a swing low. And there's a swing high, and that's basically, we're going to look at the same swing low. So at any rate, that you kind of get the picture. So with this particular piece of software, which is called Dynamic Trader, what I do is I look at the extensions and the symmetry levels associated with the Fibonacci's. Now, here we have this major level here from, and let me get the date for that. Let's see that date. The swing high this is January 26th. That's when the market made an all-time high. And January 26th, the low of February 9th. So that was and I do have a tool in Dynamic Trader that I can use to get the number of points. I'm just going to do some quick math here. So our high was 265.93, and our low was 233.76. So about 3,200 points in the Dow is what this represents here. Now, this is 32 points in the DIA, which is what we're looking at. So a 32-point move in a stock is pretty good. So anyway, what happens when I draw this particular level from this high to this low is I get these corresponding Fibonacci levels. And that gives me a foundation and a basis from which I can begin to establish a thesis, and that's all about support and resistance levels. Now, the Dow has not really done a very good job of going higher after it's gone lower. Now, it's tried a couple of times to go higher, but it hasn't even found the 786. And the 786 is kind of a playful level. It's a level that is there for the purpose of kind of providing a little bit of pushback. I call it the trampoline level. It kind of, price oftentimes just kind of bounces off of it. It doesn't really ricochet off of it like it can the 100% symmetry resistance or the 618, which is kind of a minor secondary target, but it's also an area where price will oftentimes, when it gets there, kind of be rejected. Then there's the 50% level, which is the first level that price tries to get to when it's retracing from a low or from a high. So, there's a variety of different personalities associated with the different price levels. And if you study Fibonacci's enough, or if you choose to utilize my coaching services, we do talk about these things. And these are these are very important dynamic qualities that are part of the Fibonacci um, family, if you will. So at any rate, like I said, the Dow has not done a very good job of recovering off this low. It hasn't even made it up to the 786, and it's basically tried to come all the way back down a couple of times, as we know. And the second attempt to go higher did get kind of formidably pushed back at that 618. It's like, okay, you had your chance. You came back down, and now, let's see what you got. Well, you didn't have very much, so now you're going to get rejected, and boom, came down again. So now the market's kind of in pseudo recovery. It's beginning to do a little bit of sideways stuff here, but it's not really giving us anything to hang our hat on necessarily. So we need to be able to look at where we're at in the overall scheme of things as it relates to um, the market energy to the downside. And so with that, what we need to do is look at this measurement, which tells us how much or how far the market can go down. Now, okay, so you see I'm erasing a couple of lines here. That's the 382. The 382 is kind of a kind of a little bit of a nuisance line. I put it there just to see if I get any action or reaction at all from price when it hits it. Most of the time it doesn't, but if it does, I know that the move in that direction really doesn't have a lot of veracity. So if there's a move back up from a low and it hits the 382 and starts to quiver and twitch, I know that that move up is not a very powerful move up, and I will actually take a short at that point. But if it moves through it without even paying attention to it, which it often does, then I'm looking at the 50% and by extension the 618, and I'm going to look to see how price reacts there. So at any rate, what has happened here since um, since this level from the low to the high, which takes into account all of this price action here. So what I'm looking at here is how price has reacted since those levels have been hit. So you can see how the 618 to the downside now. Now remember, this was the move from the low to the high, not the high to the low like these were. So we get downside action from this move here. So with that in mind, price came down, hit the 618, and bounced back up again and actually went higher and tried to get through that 618 to the upside again and was rejected. So it came back down, went through the 618, and just ripped through the 786. The 786 didn't even stand a chance as it relates to being any sort of support for price. And that's not atypical, because when a market is moving to the downside, it will oftentimes just totally ignore and negate any kind of support that it might encounter, because fear, as I've mentioned, is much stronger than greed. And it's kind of like, okay, sell first, ask questions later. So you can see how the 100% level, however, was respected. In fact, it was respected so much, price never even really got down to that. Now, 100% would have been a retest of the February low. We did not get there. Now we actually bounced up pretty good from there. Looked like we were going to come back down again and try to retest it, but we found some pretty decent support in yesterday's market session, and that's where we went sideways. This was Monday, where we went up. This was Tuesday, where we came down. This was yesterday, where we kind of chop, chop, slop. And today we went up, but we encountered that 618 again. And that 618, oh, sorry, this is the downside 618. Let me explain a little bit of something about the downside 618. So when price moves down through a level that is in accordance with its movement, in other words, this 618, this 786, and this 100% are designated for downside move support levels. But if price moves through a level, those levels that are traditionally support to the downside will become resistance to the upside. Now, there isn't as much resistance as there is support associated with that level, but there is still resistance. And you can see how we moved up to the 618, which is actually the support 618, not the resistance 618, and price bounced off of that. Now, what is that telling us? It's telling us that the 618 is providing resistance and that the upward movement in the Dow today, while it was great to see a 450-point move, it was rejected at a 618 that shouldn't have been as much resistance as it's showing it to have been. So right now, we still have an upside bias because we did close higher than yesterday. And we're going into a 3-day weekend, and we're starting a new quarter on Monday, and we're officially starting earnings season on Monday. So I think because of the sentiment associated with those events and those circumstances, and given the fact that we did close higher today, even though we didn't make it through the 618, it would have been really nice to maybe close a little bit above the 618, like maybe right around there where you see the top of that candle, but we didn't. And so we are where we are, and we have to take it as we're given it. So for now, I am looking for some more upside on Monday, but I need to qualify that. 3 days without trading oftentimes will bring in some information in the form of news that may or may not be conducive to an upside move in the market. So we'll have to see what transpires over the weekend. So there's how I measure the Fibonacci's. And there are some other things that I do as well, and that's enough for now, though. But you get a sense of how I view and what I'm looking at for how I set up trades as an initial aspect of how I'm setting up the trade. Let me just show you a couple more things real quick, just so you have a little bit more fleshed out idea. So this up move from here to here, remember, we look at other up moves as well, so we can get combined levels that give us information that's a little bit more purposeful and confirming in a lot of cases. Now, if by doing a secondary level doesn't provide any confirmation or any additional information that assists us in our thesis, then we really don't need to use it. But this particular level does give us a little bit of additional information, this area here. So we have this, which is all these, and now we have this, which is this more minor area right here. So if we look at how price moved down through the 618, almost came to the 100% symmetry support, which would have been a revisitation of the February lows, as I mentioned. There's also a 1618, which is a secondary target from this low to high. Now, it did not reach that secondary target, which means that buying came in before the secondary target was hit, which is actually bullish in this particular case, because we are looking at a market that never did make it to the second target. And so as it moves up and comes back down again and still doesn't hit that secondary target and begins moving up again, it's looking as if that secondary target is becoming less and less, has less and less efficacy as it relates to being a target. So we begin looking to the upside. But you can also see how there's a 100% symmetry support here, and that has conspired with the 618 of this bigger move. We have the 618 of this move and the 100% of that move right here in this confluence, and that conspired to push price down today. price did a good job of getting up to the 618, but ultimately it was forced to pull back. But that's okay. It's kind of like reloading. So I think on Monday we will get some upside action, again, barring any over the weekend news that might preclude that. Okay, so that's that's relatively long-winded, but that is how I evaluate initially whether or not I'm looking at something for the purposes of setting up a trade. So I do things a little bit more concise because I know how to do it and I'm not explaining how to do it while I'm doing it. So once I am working with someone or a group of individuals where I am, uh, you know, performing analysis and taking Fibonacci levels and applying them and developing a trade thesis, I do it more quickly and, as I said, more concisely and more succinctly because the knowledge and the understanding is there on the part of my group or my coaching client. So at any rate, I hope that helps a little bit anyway. But I do want to show you before we adjourn for the day. I want to show you two charts. One is the VIX. Love showing the VIX. Volatility is the most important metric in the financial markets. Nothing else. That wouldn't have been accurate. I was going to say nothing else matters. That's not accurate. Uh, Volatility must be understood in order to effectively trade the financial markets and specifically trading options. You still need to understand volatility because it does play into sentiment. But if you're trading stock, but with options, volatility is the number one key metric that must be understood before you enter into any options trade. And there's so many elements associated with volatility. The VIX, as I show you every day, is the measurement of the put call ratio in the SPX or the S&P cash market, and it gives us a good idea of what is happening as it relates to how people are feeling and what is actually happening in the market. Today, one heck of a drop in the VIX. I mean, this was a big move down. So almost 10%. Now, will we come back down to this level here? That's the 1823 level. Maybe. I see this doing. I see the VIX moving lower. I really believe it will. We had the VIX had an opportunity today, actually yesterday, to go up through this pinch in the Ichimoku cloud, but now we have this very bearish cloud in the VIX. And that's telling me that the VIX is going to start heading lower. And when the VIX heads lower, the market moves higher. Now, obviously, we're not just going to go down, 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 down. There's always going to be up moves, but I think the VIX stays lower now. The VIX is going to begin. Well, you can see how it's begun to go down here. There's a bit of a downward channel. Get that cleaned up here. You can see how this has kind of begun, doing this, whereas before it was kind of doing this. So we've kind of turned a corner to some degree with volatility, and we'll just have to see how that plays out going forward. So that's that. And the last chart I want to show you is Amazon. So once again, President Trump tweeted his disdain for Amazon. They have a hate-hate relationship. No love there. And Amazon kind of dropped like a stone. And here's another example of a stock not hitting the downside secondary 1618 target and then just jettisoning up off of its lows. So I think Amazon may be done going lower. That's really going out on a limb, making that statement. It's not a prediction, but Amazon is the market leader, bar none. I mean, the sentiment, the momentum, the energy, the investment in Amazon is greater on a bullish scale than any other stock. Now, it's had a rough go over the last few sessions, but that's the type of thing that happens oftentimes before earnings season, so that it becomes a lot more attractive for big money to begin buying it again. So with the low today coming in at 1365.20, was that the low? Wow, I didn't realize we went that low. I thought okay, anyway. 1365.20 was the low of the day, and it closed at 1447. That is an 80-point move from the low to the close. And the high of the day was 1455. That's another 8 points. So this thing really busted a move to the upside. Now you can see it bounced off that 100% symmetry support level. This is support. This is not resistance. So this particular 100% 1272 1618 is, a downside Fibonacci measurement. And I'm using the Thinkorswim platform for the Fibonacci's for this. I will probably begin using the dynamic trader just because and just suffice it to say I use both just for the purpose of it's for lack of a better way of describing it, it's just what I decide to do when I decide to do it. So at any rate, as you recall, I got into Amazon here yesterday, took quite a bit of heat today as the market dropped, but I'm looking real good right now. So, I thought the market was going to go up today, and I didn't have any clue that Trump was going to come out and tweet, but he did. Dropped Amazon stock, but Amazon recovered. And I got to hand it to Joe Terranova. Hashtag Joe Terranova on CNBC halftime report. He's one of the traders on that program on CNBC. He called it. I think Amazon was trading down about $20, and he said, "Mark my words, Amazon's going to go green and close green today." And I thought to myself, I like that. I mean, obviously because I'm long, but I went ahead and I bought some more. And I don't often base my decisions to add to a trade or enter a trade on what someone else says, but this just felt as if it was the right thing to do. So I ended up adding some, but I waited until Amazon did go green to add. And then it went up about another $20 or so and ended up about $16. So at any rate, I mean, these are the types of things you encounter during the day. There are many, many, many different resources and information sources, and it's very easy to get confused. It's very easy to not pay attention to your inner trader, to understand where you're at, what your thesis is, how you feel about a particular trade, and kind of establish a framework and a kind of a base from which you operate. That's so incredibly important, and that's the primary component and dynamic of what I teach my coaching students. You've got to pay attention to what's happening within your mind, body, and soul. You are going to be utilizing your intuition. You are going to be arriving at an idea that is uniquely yours, and it's normal to doubt it. But ultimately, you will trust it because it is your personal holy grail that is talking to you, that is telling you, that is kind of taking you by the hand as a trader and saying, okay, this is what we're going to do. And that's based on information. That's based on research. That's based on technical indicators. It's based on market momentum and sentiment. And it's a lot of stuff that kind of goes into a hopper, gets rolled around, and then gets spit out. And, it becomes your decision to make the trade or not based on all of that available information. And therein lies the need to be able to look at any given trade thesis and determine the probability of its success. And that's an advanced skill. So at any rate, Amazon went higher today, closed higher. The market went higher today, closed higher, although it did back off from its highs. But it was an amazing end to the week, and it played out like I thought it was going to play out. I'm obviously very happy about that, and we're going to take it a day at a time like we always do. And again, I'm thinking Monday we're going to have an up day. So we'll see if that happens. So Easter is Sunday, and also Passover starts this weekend. So for those who celebrate either or both, happy Passover and happy Easter. And with that, I'd like to say have a wonderful 3-day weekend, and everybody trade safe, trade what you see. Good night and good trading.